Welcome back to the portfolio, everyone. And today I'm giving you 4 high-yield dividend stocks you can add to your portfolio during all these crazy market times. So of course, we always start by getting right into my portfolio, which currently sits at a value at $31,362. Market close, we saw a nice last day of trading for this week, gained almost 3.7% on the day, or just over $1,000 in price appreciation in one single day. Of course, we are still down over 15% overall in the portfolio because of the crazy market volatility, and we're down for a dollar value of $5,526. Moving forward later in this week, you're going to get a portfolio update where I go through each and every holding. And if you look forward to seeing that coming out later in the week, please like and subscribe. I'm the Gen Z investor, and on this channel, we talk about personal finance and investing. And anything you do, whether you like, you comment, or you subscribe, it really helps out my channel, and I really do appreciate it. So we're going to jump right into the list. And the first high yield dividend stock we have is, of course, 3M Company. So this list of 4 high-yielding dividend stocks, these are not the safest dividend-yielding stocks. They're not the riskiest dividend-yielding stocks. These are stocks that I believe currently can sustain their dividend moving forward. Can I assure that this company will be able to pay their dividend over the next 10 to 20 years without changing anything? May not be that way for all these companies, but for people who are looking for that nice dividend income coming into their portfolio right now during times of very much uncertainty where we don't know how the market's going to perform moving forward and really need that consistent cash flow coming in, these 4 high-yielding dividend stocks may make a great addition to your portfolio if you do some research and you decide that these will fit your investing needs. So of course, the first one we have here is company 3M or MMM ticker symbol. So of course, they trade at a value at $146.46. Right away, if you don't know what 3M Company is, this company operates in various sectors. So before we jump into the dividend information, I would like to show you the overview of the company, because this is why I put this as my number 1 pick right now during times of market uncertainty, was for this reason right here. 3M Company develops, manufactures, and markets various products worldwide, so they have a global distribution network, and it operates through 4 business segments: safety and industrial, transport and electronics, healthcare, and consumer. And what I like about those 4 sectors are, even during these times of uncertainty where we don't know how the economy is going to perform, all 4 of those sectors are needed. They are essential sectors where these sectors continue to have operations, and 3M will continue to generate revenue during these times of uncertainty. So we're going to, of course, this is a high yield dividend video, so we're going to jump right into the dividends. And 3M supports a very nice 4% dividend yield, a sustainable 70% payout ratio, because when we're looking for payout ratios for companies who have a nice sustainable dividend, 70% is kind of the max you want to be looking at. And 3M has also had a massive 5-year dividend growth rate at 11% average dividend growth over the last 5 years. And one very impressive thing to note is they have a 61-year dividend growth history. So this company has continued to increase its dividend through recessions. It's survived tough recessions, 2001, 2008, even previous ones, because of its 61-year dividend growth history, and it continues to weather the storm and keep out pumping dividends back to shareholders, which is always great to see and what you really want to look at when you look for high-yield dividend stocks. So of course, you always have to check out their dividend safety rating from Simply Safe Dividends. Of course, this is not the best rating out there. There are a lot of other metrics they use to tie into this rating, but I do like it as a quick snapshot to see what they believe this company, how safe this company's dividend is. So of course, same as Seeking Alpha, we got the 4.01% dividend yield. Currently have very nice dividend safety score of 75, so it is a very safe dividend. Anything over 60 is considered somewhat safe. This is a massive company, a large cap company of $84 billion market cap, and last year's dividend growth wasn't the best at only 6%, but of course we looked at their 5-year average dividend growth and we saw that was around 11%. So still very nice dividend growth with this company, and that's the first high yield dividend stock on this list. Next, we're going to move on to number 2, Walgreens Boots Alliance, ticker symbol WBA, currently trades at a price of $44.50. And of course, this is Walgreens, the retail pharmaceutical company, and they operate a bunch of different retail locations. They own a couple different brands, and they spot a very nice 4.11 dividend yield, a very nice market cap just shy of 40 billion. If we move over to the dividends right here, like I said again, a 4.11 dividend yield, very, very sustainable, 33.3% payout ratio, so a very low payout ratio, and very nice 5-year dividend growth. So of course it's not the highest dividend growth out there, but if you have companies that increase their dividend between 5 to 10% per year on average, that's kind of what you want. That gives you a nice indication that you're increasing your dividends faster than the rate of inflation, and with a very solid 43 years of dividend growth, it's working its way towards being a dividend king. And of course, with such a sustainable payout ratio, I'm sure, or I believe, that they will be able to reach that 50-year dividend growth mark moving forward, of course, over the next 7 years. Moving over back to Simply Safe Dividends, they have a high dividend safety ratio at 79, of course, very safe. Another large cap company at 39 billion. And last year they grew their dividend at 8%. So of course you can see here this chart starting from 2000 all the way up. They've seen very nice dividend growth. So that dividend has been continuing to be increased year in, year out. So which is always ensures that your cash flow coming into your portfolio is growing at a faster rate than inflation. Moving over to number 3 on the list of high yield dividend stocks to buy today is, of course, AT&T. Like I mentioned before, this list isn't a bunch of surprising companies. These are the tried and true blue chip stocks that really can provide you that consistent dividend income during these times of uncertainty. So of course, AT&T, ticker symbol T, a telecommunications service company. We all know what they do. Cell phone company. They provide a lot of other internet services as well. A lot of different media services and entertainment services. If we move over to their dividend chart, because that's what we're looking for today, a very, very high 6.66% dividend, again with a sustainable 40% dividend ratio, with 5-year average dividend growth rate is not very high at all, just around 2%. Inflation each year ranges between 1 to 3%. So a lot of people use 2% as the average rate of inflation. So of course, 2% means they are consistently growing their dividend to match inflation. You aren't getting growth that beats inflation, but you are consistently getting that increase enough to just match inflation moving forward with a very high 35 years of dividend growth history. So of course they are a dividend aristocrat. They are working towards a way to be a dividend king. Will that happen moving forward? I'm not too sure. Of course, with all these companies, if you are looking to make them as a very long-term hold, there's a lot of other factors about the company you have to look into rather than just the dividend yield, the payout ratio, and the sustainability of that high yield dividend. You want to look at their balance sheet, their cash flows, and a bunch of different metrics to make sure this company fits your overall portfolio needs. But AT&T does have a high level of debt that does concern some people. Other people aren't too worried about it and believe the company will be able to pay it off and reduce it very nicely. So we'll see what happens to them moving forward. Of course, we're going to check their dividend safety score. So a bit lower, but still considered a very safe dividend, or a safe dividend from Simply Safe Dividends, currently at a dividend safety score of 65. A mega cap company of a $224 billion mega market cap. And as we saw earlier, very slow dividend growth, just 2% last year, but at least we're getting that dividend growth that matches our money to inflation. So we're at least maintaining the same amount of money of buying power each and every year. The last company on our list is somewhat of a controversial company. Some people love it, some people hate it. Of course, IBM. Personally, I don't know how I feel on IBM for the long term, but of course, right now, during these times of uncertainty where you people really want that consistent cash flow coming into the portfolio, I think IBM is a great high yield stock that you can add in. Currently trading at a value of $120.12, ticker symbol IBM. We'll move over to the dividend chart right here. This is where it gets very interesting. They spot a very nice 5.4% dividend yield with a very sustainable 55% payout ratio, continuing to grow their dividend at a very nice rate, 5-year dividend growth rate at 8.6%, with a very nice 20-year dividend history. So they are working their way to become a dividend aristocrat. They are almost there, 5 more years. And with a payout ratio as low as 55%, they have a lot of room to continually increase that dividend while maintaining a lot of cash flows for them to also increase and improve their actual business operations. With a very nice 5.4% dividend yield, this could be a great addition to your high income portfolio. Moving back to Simply Safe Dividends. And of course, same value as AT&T, a 65 dividend safety score, which means the dividend is considered safe. Another mega cap stock with over $100 billion market cap. Last year's dividend growth was a bit slower at only 4%, but as we saw, the 5-year dividend growth rate is over 8%. So all four of these companies, are high yield dividend payers. They all have somewhat sustainable payout ratios. No one can be sure if these companies will be able to sustain that dividend over the next 10 to 20 years. But right now, when you need a lot of income into your portfolio, these are some solid blue chip companies that you know are probably not going out of business tomorrow. They're not the highest risk companies out there. They're not the safest companies out there. They sit right in the middle. They all have dividends that are considered safe from Simply Safe Dividends. We don't have any very safe and we don't have any borderline safe. They're right in that middle. So if you're looking for some income right now, you want that cash flow to come in to increasing your buying power over the next 6 months to a year, these might be some 4 high yield dividend stocks you will want to check out. So as always, we want to wrap up the video back in my portfolio and say, thank you for tuning in. Those are my 4 high yield dividend stocks you can purchase today. And of course, these will increase your cash flow during all these times of uncertainty. And I would really like to thank you for tuning in. Please like and subscribe if you enjoyed the video. We will make more videos on personal finance and investing moving forward. Thank you. See you next time.